Hello traders everywhere, Adam Hewison here with your midday market report for Friday the 21st of June. We could say this is the end of the week, of course it is, and it has not been a good week for the bulls. But we had early warning signs. I want to show you those early warning signs. We also made a movie a couple of weeks ago to show you exactly what they are. We're also going to be highlighting sell in May and go away. That's something that has happened particularly strongly this year. And why did gold crash so strongly? So we'll be looking at those things. And also, if you're looking at this on an iPad, there's a great browser called Puffin, which is free. You can load it from the App Store. Highly recommend that. So let's get started right away looking at the market. So we go to portfolio, and right away we're looking at a weekly chart on the Dow 30, and we're going all the way back from the beginning of the year 2013. You can see what stands out. This is a candlestick chart, high-low weekly close on the Dow. What stands out visually right away is you have 1, 2, 3, 4 red candles. You have to go back. You can't. This year it's the first time this has happened. This has been a big move. Now, if you put it on monthly trade triangles, you see we got very positive on this market on 13,661, and that occurred on, let me just turn this off here, that occurred on the 22nd of January. The trend was very strong, very much to the upside. We also had a warning signal. This is the important thing I want to share with you, is on our weekly trade triangles, because we use the monthly for trend and the weekly for timing. And there's the warning sign that came in on the 5th of June, 16 days ago. So it was saying that the market is not good, something's happening, you really want to be on the sidelines. We've been saying that pretty consistently for the last couple of weeks. So look at the market now, where is it headed? So let's take a quick look at where we can see the Dow headed. Let's go out a little further in our chart. And this is a major low in our opinion. So let me just take this candlesticks off, the triangles off, and put in our Fibonacci tool. The Fibonacci tool is an amazing tool. How it works, I'm not sure. No one knows for sure, but it's a reaction. When the market goes up, there's also a reaction. To go forward, you have to push backwards. All of those things you can talk about. But the reality is, I've seen this work over the course of my career on countless times. Now, here we are. The high was here, 15,552. That's what we're counting as the high. And the low, the recent low, was 12,447. You can see it right here. So a retracement, a 38.2% retracement is considered normal, a 50% is normal, and a 61.8% is a little bit extreme, but it's potentially could get there. I would not be surprised to see us heading for the 14,000 level on the Dow. And here's why. Clearly you have a very strong downward trend, very strong downward week this week. Obviously the bulls lost a lot of money, and if you're following our trade triangles, you should be out of the market right now on the sidelines, probably waiting for a opportunity to get long based on our monthly trade triangle. So that's what we're looking for, 14,000 on the downside, possibly even to 13,633, but 14,000 I think is pretty much in the cards unless there's something changes dramatically. But we're getting into an oversold, not quite there yet, but getting into that territory that we want to be looking to be a buyer based on some other technical aspects. So let's go to our next market. Next market we're looking at is the S&P 500, and I'm going to put the same Fibonacci tools in, measurement tools, and there we have it. So we could see this market going to 1555 is not even a stretch, 1514, 1514, not even a stretch. So let's call 1500 is where we're looking for this market to go on the downside. So again, the trend is clearly longer term positive. We put our trade triangles in. You can see the monthly kicked in here at 1470, and the weekly kicked in right there at 1626, and that is a fact. Okay, so let's move on to our next market. This is the NASDAQ. Again, we're looking at weekly candlestick charts, and I'm going to just leave the monthly. The monthly kicked in right around where everything else kicked in. And I'm going to put in a tool that I think could be very interesting. I think the other thing to look at here is if we just do this on a close-only basis, which you can do very easily on MarketClub, boom, there, we can draw a very simple trend line from here to here. Now we're touching 3 points. Remember, we have to touch the 3 points. We've done that. We're pretty much right there now. So this market needs to hold, otherwise it's going to break this trend line from November of last year, 7 or 8 month trend line, and that will be significant. So let's move on. The measurements, you can see, I'll put the measurements in for you really quickly. From the close only here to the lows, the lowest low, you could be looking at a 50% retracement down to 3,172. So let's see how that plays out. But generally speaking, if the other indices are going down, then this is probably going to follow suit. Moving on to gold, we've actually nailed gold. If you remember, we were talking about this. So I'm going to put a candlestick chart on here about the market rolling over much like it did here and here, and the measurement, the candlestick triangle measurement we had. So we expect that to continue to go lower. If you haven't seen our special gold video, I definitely highly recommend it because it really shows you why and how gold crashed. And take the time out, it's only about a 5-minute video, 4-minute video, take the time out to look at that video. I think you'll really get a lot out of it if you missed it earlier. So let's move on to our next market, and it's crude oil. Now crude oil is really, the concern I have with crude oil is this. We have a potential negative engulfing line right here. If we close lower next week, that's going to probably negate a lot of things. But as you know, we've been very positive on this market. The trend is still certainly up on both the weekly and the monthly. So that's good. But nonetheless, the action this past week is a little bit disturbing. So let's go to our next market. This is the euro-dollar. Euro-dollar put in a very, very negative engulfing line right here. It engulfed the previous week. If it closes lower next week, that's probably going to be a top. We were looking for this market to go to 136, which is right here. But this is sort of a little bit negative in our opinion. So we'll have to see how that plays out. Look, this past week has been a big, big week in the market psychologically, and a lot of traders are really rethinking these markets, and I think it's important to do that every once in a while. The bull trend that we've seen since 2009 may be coming to an end, and if it does, you have to be prepared for that. And I think the best way to prepare for that is by looking at and using our trade triangle technology. So Adam Hewison for MarketClub, lots of analysis going on this weekend. We'll be talking to you on Monday first thing. So thanks for stopping by. Every success using MarketClub. If you're not already a member, give it a try. It's a free trial right now, I believe. And we'll see you next week. Have a great weekend, everyone. Thanks for watching this video. I hope you found it helpful.